Hello and welcome to the Weekly Outlook at XM.com. I'm Maria Bashardadis, and joining me is Senior Investment Analyst Rafi Boyadjian. We'll be reviewing the week ahead. So Rafi, let's begin over in the US, where the Fed is experiencing more pressure to add stimulus into the economy, given the ongoing pandemic and slowing recovery. We'll get the Fed's decision on Wednesday, along with a barrage of data, including retail sales from November and flash PMIs. What should we expect, and how is all this likely to affect the greenback?
Well, the focus is really on the Fed, Maria, next week. As you said, there's been a lot of pressure for the Fed to provide additional support to the economy, given the worsening pandemic in the United States. We're seeing the death rate rise to record levels on a daily basis. And although so far the recovery hasn't been too badly affected, that could change in the coming weeks and months because of the increasing number of restrictions being imposed in various states across the country. The problem is, though, there's been little indication from the Fed that it's ready to boost asset purchases. The Fed, although it has already done quite a lot, and probably its existing policy is enough to cushion the US economy. Nevertheless, it has to be seen to be doing something. And so what it might decide to do is to strengthen its forward guidance, specifically around its asset purchases, just to reassure markets that it will continue to buy significant bonds on a monthly basis for the foreseeable future. And it may also signal that it will concentrate its purchases on longer dated bonds. And this could be quite significant because if they do get the right message across through the forward guidance, may pressure the yields on 10-year Treasury notes. And this could lead to a significant fall in the US dollar. As far as the data is concerned, it might not have a huge reaction in the markets, as really what the market really wants to see is what the Fed is going to do next.
Okay, let's move over to the UK now. Along with the Bank of England's policy meeting on Thursday, we'll get a slew of economic releases. Since the Bank of England boosted its quantitative easing program back in November, do you think policymakers are likely to make any changes next week? And regarding Brexit, what are the latest prospects for a deal? And what is likely to happen to the pound if a no-deal scenario materializes?
So the Bank of England is almost certain to stand pat next week. As you said, they did quite a lot back in November. They increased QE more than expected. So instead, the data should attract a fair bit of attention. We've got job numbers, retail sales, and of course the flash PMIs for December. We did have that lockdown in England for the whole of November, and we should see from the PMIs how strongly the economy bounced back in the first half of December when England came out of lockdown. But as always, the real spotlight will be on Brexit because we still don't have any agreement. We were hoping that we were going to get an agreement in this past week, but the Prime Minister Boris Johnson and the European Commission President agreed to extend the talks until at least Sunday. If there's no substantial progress by Sunday, quite possible the UK walk out of the talks, and we may wake up on Monday to the news that there's going to be no deal Brexit. Now, the pound, although it has fallen substantially, still nowhere near pricing in the real risk of a no deal Brexit. So if it does look like we're heading towards a no deal outcome, there's plenty of scope for the pound to fall even further.
Taking a look at other central banks now, both the Bank of Japan and the Swiss National Bank will hold their last policy meetings of the year next week. Any changes expected for either one?
Well, we're not expecting any significant changes. From the Bank of Japan, they will likely extend their emergency lending facilities, but as far as asset purchases and interest rates are concerned, they really have very little room for maneuver. But having said that, now that there is a vaccine in the picture, and on top of that, the Japanese government is doing its bit in terms of boosting the economy with fiscal stimulus, the Bank of Japan probably won't need to do any more than it has done already. Now, looking at the SMB, there's good news and bad news for the SMB. Again, the more positive outlook for the global economy now that there's a vaccine, and also the fact that the euro has been strengthening against the franc is good news for the Swiss National Bank. On the other hand, the dollar has weakened quite a lot, and in fact, it's fallen towards the 2015 levels when the SNB removed its cap against the Swiss franc, and we saw a big surge in the franc at the time. So this could pose a new headache for the SNB. So we might see some change in the language regarding exchange rate in the statement.
And finally, we'll get Eurozone PMIs on Wednesday. Will this data matter for the euro, given the good news that the European Central Bank just announced extra stimulus and EU leaders agreed on a virus rescue fund?
So yes, the PMIs, they're always important, and especially, of course, like in the UK, we saw tight restrictions in November across the euro area. So the PMIs, the flash PMIs, which cover the early parts of December, they should give us an indication as to how strongly the Eurozone economy bounced back. But as far as the euro is concerned, it's probably not going to trigger a huge reaction, given, as you said, we just had extra STB stimulus being announced, and of course we did get that final approval of the Eurozone virus rescue fund, and of course we have the positive backdrop with the vaccine as well. Having said that, we still have some risks that could negatively impact the euro. Of course, there's Brexit, so although the pound is more likely to take a huge blow from no-deal Brexit, the euro will also be negatively impacted if there is a no-deal announcement. And also another thing to consider is the ongoing stimulus talks in the United States in Congress, because if Congress fails to come to some kind of agreement on a new fiscal stimulus package before they adjourn for the holiday period, then that would spur some risk aversion in the markets, which would in turn push the dollar higher, and that would, of course, mean a weaker euro.
Rafi, thanks so much. And thanks for joining us at XM.com.